my goodness. I didn't know all this information that I could have been utilizing all along. I had no idea. I was over here in the dark and I could have been utilizing all this wonderful chunk of information. It's tax season, baby. Let's get prepared. For many people, the word taxes sparks an instant sense of dread. It doesn't have to be like that, Pookie. It does not have to be like that. What if filing could be predictable, manageable, and easy? Perhaps even empowering. Tax preparation does not have to just be an annual chore. When understood correctly, the tax code can help you keep more of what you earn. Plan for the future and run your financial life with confidence. Today, you're going to discover the difference between filing your taxes and optimizing your taxes, both legally and effectively. Let's go. Okay, so let's start with the basics. When filing taxes as an individual, the most important deduction is typically the standard deduction. Why? The standard deductive is the most beneficial for single individual filers because it is a fixed amount that automatically reduces your taxable income. Now, the other option that you can choose between is itemized deduction. You simply cannot do both. You only choose the itemized deduction if your deductible is higher than the standard deduction, which for tax year 2025, the most that you can deduct is $15,750. If your deductible is higher than $15,750, then you should opt for the itemized deduction. Now, if you go with the standard deduction because you're a single filer and you don't have a deductible higher than the standard deductible amount, there's something else that you can take advantage of, the above the line deductions. People with traditional IRA contributions, your contributions are often fully deductible or partially, depending on your income, or whether you're covered by a retirement plan at work. If you have contributions to a health savings account, you could also deduct those. Student loan interest deduction, educator expense deduction, and self-employment deductions. Those are all deductible. Those are all under above the line deductions under standard deduction. Now, for itemized deductions, remember this is for people whose deductible expenses are higher than the standard amount. So they would opt for itemized deductions. There's something called the state and local tax deduction, SALT for short. You can deduct a combined total of up to $10,000, $5,000 if married and filing separately, for state and local income taxes or sales tax, plus property taxes, of course. You can also deduct your home mortgage interest up to a certain amount of principal, your charitable donation, medical and dental expenses, casualty and theft losses. To maximize your tax savings, the first step is always to calculate your total itemized deductions and then compare that to the standard deduction and choose whichever is greater to get the most back on your tax return. All right, now we're going to talk about some of the most important and crucial credits that people should know when filing your taxes. Unlike deductions, which reduce your taxable income, credits, on the other hand, reduce your tax bill dollar for dollar. So, credits have a powerful impact on your financial outcome, more so than deductions do. An example of this is, so if you owe $2,000 in taxes, you can deduct up to $500, and that may decrease your taxable income to probably around $1,800. On the flip side, if you owe $2,000 in taxes and you claim a $500 tax credit, your tax bill immediately reduces to $1,500. That's the power of tax credits. Now, it's crucial for you to know the two different types of tax credits. Before I continue, I just want to invite you guys to join this wonderful community where I'll be spreading more about taxes and breaking down the nuances and helping people to understand more about taxes and how they work and how you can file to get the best back on your return and make tax season as less stressful as possible. I want to extend the invitation out to you guys to subscribe, join the community, be a part of it. Follow me on any social media platform. I'm on Instagram, TikTok, YouTube, of course. I created a book for you guys to go through with so much more of this information in detail, so much more than what I'm going to be talking about today, to give you guys a manual and a guide to filing your taxes to get the most back possible. And so that you file your taxes and you have the least amount of stress as possible. The most stress-free tax season ever. Hopefully, it makes you more educated and more knowledgeable about taxes and how it works. And taxes, if you want to start a business, how you'd go about doing that. Or if you have a sole proprietorship or just an LLC, and even anything upwards, an S Corp, a C Corp, whatever it is. If you are interested in also running a business, opening a business, starting a small business, the book also breaks down and talks about filing taxes for business owners, and it even has a checklist for business owners to utilize when filing your taxes, so that they are the most prepared as possible, and they are checking everything off the box, and they are claiming as much deduction as possible, and they know exactly what to deduct. The first book is called Understanding the Tax Codes by Chenille Woolery. It's on Amazon, so please do go and check it out. Make this tax season something you can remember and look back on and think, oh my goodness, something you just didn't know you needed until you bought it. And you read through those pages and you're like, oh my goodness, I didn't know all this information that I could have been utilizing all along. I had no idea. I was over here in the dark and I could have been utilizing all this wonderful chunk of information. Well, it's all in one place. I put it all in the book for you. Get your hands on those books and get ready and prepared for tax season, because it does not have to be so difficult. It does not have to be so difficult. You just gotta know what you gotta know. You just gotta know the tax codes, know the information that pertains to you, and know how to utilize it. And I also have another book. If you are a small business owner or an entrepreneur just starting out your business, don't really know about how to, it's taxes kind of all up in the air, it's not your level of expertise, it's okay. I have another book specifically designed for entrepreneurs and entrepreneurs and small business owners. It is the top business owners year-round tax saving strategy to plan for tax season way before tax season comes. It's a year-round process to make sure they are optimizing their tax returns as much as possible. And they are really storing their finances all throughout the year. So when tax season comes, it's predictable. They can predict their outcome much better than it all just being up in the air in a chaos and them not really knowing what to do. Like, oh my gosh. And you can utilize the checklist. It has a detailed calendar blueprint plan for small business owners to utilize and checklists for them to take advantage of. All right, guys, let's get back to what I was saying. What are the two types of tax credits? We have non-refundable tax credits. They can reduce your tax liability to zero, but cannot generate a refund. So it can bring your bill down, but it will not provide you a refund. If credits exceed tax owed, generally, unfortunately, the credits are lost. Some of how people might earn the non-refundable tax credits, or an example of what non-refundable tax credits are, would be the lifetime learning credit or child and dependent care credit. Now, refundable tax credits can reduce your tax liability below zero. If the credit amount is greater than the taxes owed, the difference will be paid to you as part of your tax refund. And lastly, we have the partially refundable tax credit, where a portion of the credit is refundable and a portion of it is non-refundable. Like the American Opportunity Tax Credit, which is up to 40% refundable. The Child Tax Credit, that's also partially refundable. Moving on, here are some of the tax credits that people overlook. And once again, I have a greater detailed breakdown in my book of these. More information on these tax credits, how they can apply to you, and how you can utilize them. We have the Earned Income Tax Credit, which is great for families with moderate to low income. And of course, the amount you receive it depends on your income, what you make. and the number of children that you have. Whether this credit is refundable or not, and a greater detailed breakdown of it is in my book. Following up, we have the child tax credit and additional child tax credit, the CTC and the ACTC, which helps families offset the cost of raising children. Of course, the amount you get depends on your income and the qualifying children. Next, we have child and dependent care credit. This is for people who pay child care while working or looking for work. This credit can reduce your tax bill significantly. So for those single fathers out there, this credit can be your friend. Next up is the American Opportunity Tax Credit, AOTC, which supports students or parents paying for post-secondary education. Number 5, we have the Lifetime Learning Credit, LLC, which unlike the AOTC, the LLC applies to any level of higher education, including part-time classes, job training, and continuing education. Number 6 is Savers Credit, retirement saving contributions, which is good for low to moderate income taxpayers who are contributing to retirement accounts. Number 7, premium tax credit, health and insurance marketplace credit. People who have purchased insurance through the marketplace, they may qualify for a tax credit. They may qualify for a premium tax credit. And there are so much more tax credits. That is just 6 of them that I've mentioned. Now I'm going to go briefly over how to file. Now there are a lot of platforms that you can file on of free tax softwares. Also, for anyone who knows, the tax filing deadline every year is April 15th, so file your taxes before April 15th. If you're 18 years or 19 and it's like your first time filing your taxes, don't worry, I got you. It doesn't have to be crazy. Side note, just for you, friend, standard deduction is your best bet. 18, 19, you don't have a ton of income, you don't have a ton of expenses, your best bet is most likely going to be a standard deduction. So let's move on to filing your tax. You can use a free tax preparation software. Many providers offer a free state and federal filings for taxes, at least for simple returns, of course. If it gets too complicated, they'll charge you TurboTax, H&R Block, Free Federal. Those are some options that you can look into for filing your taxes, your simple taxes, for free. Of course, you can always get professional help, especially if your taxes are a little bit more complicated. Of course, you can utilize these same tax providers: Intuit, TurboTax, H&R Block. Anyways, let's move on to your filing status. If you're a first-time filer, this might be helpful for you. You click single if you are unmarried, divorced, or legally separated. Married, filing jointly. Married couples who agree to file together. They file for one joint return. Head of the household is for people who are unmarried but paid more than half the cost of keeping up a house or providing for a dependent. Dependent status is obviously for children. If you're 18 or you're 19, you click dependent status if you know that your parents are going to be claiming you under tax return. They still provide for you and you still live with them. So even if you're a dependent, if you're over 18 years old, you still need to file your own tax return, and you'll click dependent on your filing status, and your parents can claim you if they pay or cover more than half of your expenses. And that's pretty much basically it for you to get going. You fill out the form, you answer the information accordingly, put in your information, choose your standard or your itemized deduction, depending on which you qualify for, and you submit. And you take a deep breath and you breathe out. And it's over. Thank you guys so much for watching this video. I hope it blesses you tremendously. You go ahead and have a wonderful tax season. Have a blessed new year. Merry Christmas.